join. So
okay, sorry about the delay.
Hey, we're streaming live on YouTube. Oh wow.
Yeah.
I'm a streamer now.
Exactly. No, it's really great to have joined. So to have you all here.
Hey, we're streaming live on YouTube. Oh wow.
Yeah. Okay. Done. And yeah, it's really great that we can talk a little bit about investing, because over the last couple of years, the stock market was basically the place where you go to make money, right? And yeah, so I think we got to a stage where, you know, everything went up quite a lot. And I think people are thinking, what should we do? What strategy we should implement? What better than Clem Chambers and Zak Mir to kind of discuss the dynamics of the stock market. And I mean, it's not just the stock market, because we are going to talk about crypto as well. So
I want to talk. I want to ask Clem some difficult questions. Because
okay, let's get there.
Go for it. I'm ready for you.
I know that he can answer them. All right. So over the last year, one of the giveaways was that when everybody was stuck at home and they had nothing else to do, they were gambling on small caps. So we accept that, right, Clem?
Yeah. Well, I mean, you know, people were at home and they had lots of time on their hands, and you know, they had sometimes, particularly in America, you know, cash being given to them for free, and they used that to speculate, to accumulate, and play the ultimate multiplayer game, which is the stock market, for sure.
Yeah, so that's one point. The other point is a part of that home gambling scenario was also the rally in the cryptos, and maybe it was not so surprising that Bitcoin came off the highs of 60,000 plus, almost, you know, towards the end of the sort of the lockdown period. So maybe the heat on the sort of the heat and the sizzle of both the small cap space in London and also the crypto did actually sort of fade away a bit once people got, you know, were allowed out, let's say. And then the final point is in the UK here, you got the FTSE at 7,200, which is actually quite good, because we're higher than we were when ADVFN.
Well, I disagree with you. I think the FTSE is rubbish. I think
I think it's rubbish. I hate it, and it is rubbish. But the point is that the FTSE is at 7,200, whereas the Dow and S&P and the NASDAQ record highs, you know, every other week there's a record high. And I think the final piece of the jigsaw in terms of investment, which I think you can't ignore, the elephant in the room, is the UK property market. Anyone who makes a decent six-figure sum or steals it or finds it under their sofa goes into real estate here, and there must be a massive loss to the stock market and any other assets in this country, because people are just, you know, maniacally buying real estate, and they think that's the safest thing and that's the best thing that you can do, and let's just keep, you know, maxing out on mortgages and real estate. So
that's exactly right. I think that
part of the reason why the UK stock market is so crap, which is, you know, relatively crap on all fronts, whether it's the service, the participants, the price action, every single metric, is because here we're killed by the love of bricks and mortar. So what do we do, Clem?
I think that's a pretty strong analysis. Certainly, the British are utterly property addicted, and you know, and they've been all right about that forever. And you know, I don't like property because I hate paperwork. And I hate the fact that you're sitting duck for all sorts of scams. But you know, the English are prepared to put up with that and put up with their taxes and all that messing about, because they are absolutely addicted on real estate. And the government, well, is where their money is too. It not only is the government that their income, which comes from property holders, which is, you know, a very big money flow for them. It's where the people that participate within the governmental structures, that's also where all their money is too. So, you know, that they won't let that one fail or even dip properly. And you could see that when they came along and said, let us buy the house with you. You know, let us give you your deposit. You know, and all that support for ridiculous high real estate prices A lot of that is now artificially supported by the government, but you know, it's not. It is what it is. The UK market is very structurally weak, and I think it's more of a social thing than anything, because I think we have a backward-looking attitude towards technology for a start. And when you look at the American market, American investors, which we've served millions of them, they laugh at the UK market. They literally burst out laughing when they see what the environment to trade is like. I mean, they go, "What? What's that spread? 7%? You what?" And then they look at a stock trade in a big stock, a FTSE stock goes clunk, clunk, clunk when it trades. And you look at some small stock in America that's going with vast liquidity, and they can get in and out on stocks, you know, at size, really significant size, and you would batter a 250 stock if you did that in the UK. So I mean, there's a lots and lots of systemic issues in the UK market. For example, stamp duty, which is absolutely hammering values of British stocks, and it's a real problem systemically. The UK market is really, you know, vastly off the pace, and it shows in asset prices, and that's a shame. And that's why the UK market is the lamest market in Europe in terms of valuations, which is actually an opportunity for the investor long term, because, well, guess what? The Americans show up and go, "Hey, that's a nice company, that's free, we'll buy that. Give us that one. We'll take that one away as well. Oh, no, worry about it, let's have that one." And you know, you're getting this takeover wave now, where the British industry is being rendered, because the British are quite happy to give it away, because you know they don't support their industry properly, and the city doesn't fund it properly, and they look at things that are mighty in the US and go, "Oh, that's rubbish, that is. Oh, internet, no, we don't like that. Oh, crypto, no, we don't want any of that here. Oh, yes, biotech, not sure about that." And you know, you become a economic backwater, and I think that's a trend, and the government's better be trying to change that. But I think it's got a lot on its plate right now, and there's no sign that it's going to grasp crypto as the biggest changing influence in the financial markets since the invention of the gold coin. And you know, go away with that crypto stuff. No, we don't want it here. No, it might change everything. Count for the better. We don't want it. Go away. So you know, it's politics, isn't it? And we all know that if you want to really mess something up, you get politicians involved.
Yeah. So I mean, I just want to. I just want to finally nail the property market, because I think the culture is obviously totally in property, and obviously who am I to knock it? But the real killer for me actually is not what you think, not mortgage rates being, you know, to 3% over a zero base, all the, you know, estate agents and all the other, you know, service providers. The real killer to the property market, which nobody talks about because it would be rude, is inheritance tax. So you buy a property, tax paid, and then when you die, then is 40%. And so whatever profit you would have made, it's almost impossible to have made money if you paid a mortgage over the years, and then there's inheritance tax, etc., and you haven't made provision, which is, you know, 7-year rule and this and that, and all that sort of rubbish that they've got in there. So really, inheritance tax, I think, absolutely makes a mockery of the of any proper value in the housing market, along with the other problem which people have. We've seen this in the pandemic, that most people don't have more than 2 or 3 months cash in the bank. So if they lose their job or there's a pandemic, they are looking down the barrel, especially people with families. And the main problem with being a property owner is that all your liquidity is in bricks and mortar. And unless you want to chew on a brick for breakfast, you're not going to have the 100, 200, 300,000 pounds in the bank that you should really have, and especially when you're older. And that is one of the social care and all the other stuff is a complete disaster too. So I think that I would be more rigorous than Clem is, and I just say that the whole thing is absolutely a total mess. And I think that's probably a very polite way of looking at it. And if you're on the stock market, you can click a button and you can get out immediately. And so when something does go wrong, you know, if you lose your job or this or that, you can get out. If you lose your job and we're in a pandemic, you can't sell your property. I mean, obviously, then you've got the furlough and everything else like that. But properties are very risky.
I think you're wrong, Zach. So I think you're looking at this from a financially conservative viewpoint. I know lots of people, and the houses are ATMs, and they just go, I'll have 50 grand, I go on holiday. Oh, another 50 grand, I go on holiday. Oh, I'll have 20 grand, I'll upgrade my car. And I think a lot of people out there are going to die in poverty, just before they get to the poverty stage, just before they die. So they've got this savings account called a house, and they downsize. I mean, I see that a lot, and they go, "That's a beautiful house you have. Why did you move?" Oh, well, it's too big for us now. No, we're skint, and we've got to get 100 grand out by moving to a smaller house. And I've seen that so many times. And and then they're handing out their money to their kids who don't really know the meaning of hard work and making your own way in life, and they dissipate their assets before they die and hand it out to the government. They've dissipated it all mostly, and then probably when they're old and frail, they end up in care of some sort, and the old Liverpool pathway does the rest. And so they are basically they plan to die poor, and they do. But it works for them the whole way through, and they just sell down their savings account, which is bricks and mortar, which has been fabulous for them. And you could say, well, it's ridiculous. There's been this bull market in property for 60 years, and people who have actually taken these huge property risks have made like bandits. And I'm bitter and twisted about that because I didn't. But ultimately, it's a completely different game, I think. And people, the English are maniacs for property. You see that all across Europe. They come over to you and go, look at that room, it's fabulous. I'm going to have the most fabulous place of all time. I'm going to dissipate all my money on builders and end up with a huge palace that's been fixed for the first time in 100 years, and then I'll be broke. And then I'll have to go back home again and sell it to somebody who for buttons, because nobody wants a house like that over here. So, the English are just mad on property. Dutch are the same, I think. And if you look around house prices all around Europe, there's some pretty spicy properties all over the place, Greece and stuff like that. And people just love property, and I don't like it at all. But I can understand why, because it's a trade that always works. And I mean, I've literally, been private information. I think we're going to have big inflation, and I think you're a fool if you're not borrowing money and put it into assets. So I'm levering up my property assets to get piles of cash to buy anything that's not going to be completely spoiled, and buy an asset that has some intrinsic value going forward with the sort of inflation we're going to get, 100% we're going to get in the next 3 or 4 years. So why not borrow a few hundred grand, because it's going to be worth half that when you have to come pay it back. And as long as you can find the right asset, that's really good. But and of course, property is just going to go on that run. You look at it and you go, it's already ridiculously expensive. It's already hard to own, and it's already highly taxed. There's all sorts of reasons not to do it. But actually, it's going to go from 1x to 2x in the next 5 years, even if 2x is actually only 1.5x in buying power. Where else are you going to hide your money from all this privation of inflation and debasement?
Exactly.
I mean, there's not many places to go, is there? And so,
but isn't the other point? Yeah, but I think the other point is that, let's say if I really do like the housing market, isn't it better if I just buy Berkeley Home shares or Barrett's or whatever it is? I mean, that's another thing that I buy 100 grand's worth of. I mean, that to me seems to be a better deal and a more liquid deal. And if you get your timing right, it could be it's just a cleaner way of doing it. So, and that's the magic of the stock market. You say I like Bitcoin, but I'll buy online blockchain, or I'll buy a company which is involved in that area, rather than taking the white knuckle ride of Bitcoin at 60,000 or 40,000 or 50,000. I mean, is that a fair thing? I would
totally agree with you, and I would exactly do that, and I do exactly do that. But for most people, buying a house builder, they don't even know where to start. I mean, most people are not numerate. Not many people are literate, unfortunately. Yeah, and then they've got to go into this highly skilled game, which is totally unknown to them. They've got to open brokerage accounts. They've got to get lumps of money, which would scare them to death, because 5 grand is a lot of money to most people, for example. Let alone 10 grand, let alone 20 grand. And then the blooming thing goes jiggle, jiggle, joggle, jiggle, jiggle every day and scares them to death. And maybe they get a dividend payment, and then they've got to do paperwork for the tax, etc., etc. And then they've got to learn about an ISA, and then they've got to put it in a SIP, and blah, 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 blah. You know, and then it becomes hard work and stressful, and no wonder they just buy a house and live in it.
But I think we kind of also got to the stage where the stock market rise a lot, and you know, all the assets they kind of deliver very great returns for the investor they managed to buy just after the crash last year. So where we are now, I mean, you mentioned inflation, which is definitely something the investor need to consider in order to get hold of the best asset as an edge. But do you think we kind of reached the top? Are we going to expect like a correction in the stock market, or is going to be like the property you just said is just going to keep going up?
We've reached the top, and that's where we've stopped, and that's what's bothering me. I think, you know, that when you it's a hard game, the stock market. It's a very, very hard game, and you know, crypto's a very wild game and very, very hard. And these are all skill games, and you know, most people don't want to play skill games because it's really difficult. And on top of that, there's no money. There's no, oh, I didn't mean to do that, wasn't me, oh no. You know, bang, you lost it. Bang, and it's gone. And, you know, it's terrifying to most people because most people are chipping away, building up their savings, and most of that chipping away is ambient through buying property. And then they come into this, you know, wild west situation, which is the stock market. And, you know, it's like, they don't want to go, they don't want to be there. What they end up doing is they end up going to funds. Where there is a mummy or daddy, I'm the fund manager, I know better than most other people, I'm so clever, let me look after your funds, which is a whole slew of industry that is just give me your money and we'll sort you out, which is actually the 800-pound gorilla when you look at the all of the markets. Actually, even in the US, people that manage funds have a lion's share or almost a lion's share in many of these markets, even in Brazil and places like that. Because if you go in to the actual market itself and start buying naked equity, you know, you're a gunslinger, and most people simply don't want to be in that environment. Now, the market itself right now is terrifying because everything, all the wonderful things we've seen is coming from huge amounts of money being injected into economies on the basis of printing presses from central banks. And that money has gone straight into real estate, which is why it's so high. And it's gone straight into bond values, which is why they're really high. It's gone straight into equities, which is why they're really, really high. And if they keep turning that handle, something's going to break. And they might not stop. They might stop turning that handle, which is why the Americans are going, oh, yes, maybe a little bit of tapering might be coming up, or maybe interest rates are coming up. That the market could just go bang if that happens, could drop a third overnight. So there you are, normal person, you've scrimped and saved 20 grand. You wake up one morning and you've only got 14. You know, people don't want to play that game. I want to play the game because I'm good at it.
What about gold? Just tell us your thought about gold.
Fantastic question, because why the blooming hell has it fallen out of bed in the last 4 days? I can't work it out. Not going to be inflation. You just walk down the high street and see inflation. Why is gold not going up? Why is not only gold not going up? Why is it going down? Well, you know, that's because
gold is no longer an inflation hedge. Cryptos are.
Well, I tell you, you've got a point of view there,
yeah.
But I tell you, if you buy Ethereum at 3,200 today and it's 2,500 in 4 days, it's not a very good hedge either. Yeah. I mean, you know, it's the fastest horse out of Dodge City for sure. And there's a lot of people, I think, heading out of Dodge City, and the Iranians might be flipping their gold, which might get confiscated into crypto. So when people start dropping bombs on their head in the next few weeks, you know, they've got a pile of money to use. And yes, the Chinese, you know, there might be a few billionaires in China that want their dollars in America in Bitcoin rather than in yuan in their prison camp that they're going to get thrown into. So there's all sorts of reasons why crypto is a haven asset. But, you know, most rich people want crypto like they want a hole in the head because they're too old and they don't want a wallet and they have no idea what the hell this stuff is. You know, Mr. Buffett, for example. Yeah. And it's only the youngsters and people and crazy people like me that love crypto. The most gray-haired people, they want, you know, a sovereign they can buy. And they want to bury it in their bottom drawer. So it's still a huge, $7 trillion asset. But why did it fall? Why did it fall? However many percent it fell, 9 p.m. last Sunday night in Asia. Riddle me that. All right, a fat finger pressed the wrong button and blew it up. But you know, that's a very worrying set of circumstances. And you know,
yeah, but is it the case? Is it the case that people have decided that actually the idea of being able to bite on that nugget of gold or the physical possession is actually riskier than having a Bitcoin wallet or crypto wallet?
There's all sorts of problems with gold ownership, but they're greatly outweighed by the problems of crypto ownership, mainly because most people that have savings are beyond the age where any of this crypto stuff makes any sense. And they simply, I mean, most people in no way want to go up the learning curve of crypto, even though it's fabulously opportunistic for making huge sums of money. It's just too much of a, you know, does the head in. It's the rock and roll of the kids, not the rock and roll of old fogies like me. Well, fortunately it is, but for me. But,
yeah, but you see, there could be a demographic problem here, that just like I prefer going around with no cash anymore, just because if I get beaten up in the street, like there's no cash to give them. People have just decided that physical money, physical asset, you know, the sort of portable ones, at least like the gold or cash, I'd rather have everything electronic.
It's a narrative that fits, but I don't believe that's true. If you want to buy gold coins in America, it's really difficult. They're all out of stock. And there are companies that who, for a living, mint gold coins. They can't get the gold blanks. Yeah, they literally, and I won't name them, but there are big operations that make gold coins and sell hundreds of millions of pounds worth of them. They can't get the gold because the suppliers of gold blanks, they don't make the blanks anymore. They only go stamp, stamp, stamp. Do you want one of these? And they can't get the gold blanks. So riddle me that. Now, yes,
so there's a physical shortage. There's a physical shortage, and the price is going down. Let's say.
Yeah. How does that work? Tell me that. Riddle me that. You go onto Kitco in the States and look at their stock of precious metals. Out of stock. 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 Yeah. So you know, there's a lot of funkiness out there in the market, and it's all about liquidity. It's all about the fact that central banks are minting these oceans of money, and that dash into different corners and drive different markets one way or the other. Yeah, and if somebody thinks that, you know, maybe they need to be, for example, in Bitcoin rather than in gold, because somebody said something a few days ago, and gold and Bitcoin went straight up like that, and then Bitcoin kept going, gold came straight down like that. Now, my feeling is a lot of the financial markets right now are running on autopilot, because they're running on algos, and the people that would have morning meetings and discuss whether they should be doing this and that, they're just not having them. And you know, the algos are doing their thing, and they might be having a monthly meeting, and they're pressing the monthly button, and they're doing all the trading over a 30-day horizon rather than a 3-day horizon, and things are just running on autopilot. And that means that if the algo says, oh no, we've got to buy yen and sell gold and shift some oil from one tanker to the next, all sorts of crazy stuff can happen and run off the rails, and there's a lot of money to be made. And special situations is where I'm kind of living right now, and there's good money to be made there. But there is definitely the whole market went risk off about a month ago. Anything that was risky went straight down, and anything that wasn't risky went straight up, and that's turned around a fairly large amount. Now, what will happen when they taper? And I believe they're already tapering in the US, because they're actually starting to try to suck up the short-term money and park it in long-term money. And what happens is the liquidity leaves the edges. For example, the UK, the money runs out of the UK back to America, runs out of Brazil back to America. So there's a liquidity drain going on, and it's hitting the margins. And they can just turn that tap on and off, and it will flush in and out. And the market will go up and down, just purely because the only thing driving the market right now is the money that's getting printed, and mainly by America. Trillion here, trillion there. Pretty soon you're talking about serious amounts of money. And that's a very dangerous situation for people that are holding assets, because basically the central banks have got you by the throat. And it's very easy to end up upside down in a dustbin in that sort of situation. And the market, I think, is looking very, very, very toppy, particularly in the US, if the US was to correct 10, 15, 20, 25, 30%, boy, are you going to get a pressure wave washing over everything else. So I've been very scared for about a month, and it's cost me quite a lot of money as it happens, and lost opportunity.
I think I would slightly sort of finesse what you're saying, in the sense that you are right that you've got all these risks and you know, the tapering and all those things on the horizon. But we also have a situation which you'll remember with the Greenspan put. We've got now just a massive put there for everyone, that, you know, if you lose your job, you'll be furloughed. If you lose your money in the stock market, they'll say something nice, and the stock market will go back up again. I mean, really, we're surrounded by safety nets everywhere. And you're encouraged to buy the £1 million house with 50 grand. You're encouraged to take a punt here and take a punt there and go to the shopping mall and knock yourself out spending money. I mean, we are in a very, it's what you call a nanny, it's a financial nanny state, that the market, the Wall Street goes down 1%, and you'll have a comment from the Fed chairman saying it's going to be all right. I mean, it's literally like that. So I think your concern is overblown, because we've just seen, I mean, literally, you can jump out the window. There'll be 50 people with a net, you know.
Well, I wish that was actually true. Not that I plan to jump out of any windows, but I think you do get, for example, you know, there'll be a hawkish Fed person come out and go, hawk, tapering, interest rates going up, and then someone will come out and say, oh no, everything's funky, everything's fine, everything's good.
Didn't really mean that.
And they are trying to manage this whole process, and they're doing a pretty good job. But it's a very simple thing to watch. All you've got to do is watch the S&P. It's just going straight up in a diagonal line without many bends in it. So they can't keep doing what they're doing, because there will be galloping runaway inflation, and there will be, and if they keep doing, there will be hyperinflation, and they don't want that. They do want 100% inflation, because that's how much it takes to get back to where it was before pre-COVID. And they will try to navigate towards that, but it's quite easy in extremis for stuff to come off the rails. And you know, that's what I, every now and again there's a wobble in the force that suggests that things aren't going quite to plan.
So Clem, so yeah, what I wanted to ask is, like, investors, they kind of agree with what you're saying. What will be your advice, or what should they look at? Should they get into mining, for example, or look at gold or silver, or just be a little bit more easy with stocks?
Okay, this is the drop down. Okay, if you want to get involved in stocks because of FOMO, you're going to lose your shirt. So first of all, you've got to have a reason. Okay, and once you've got a reason, all you've got to do is decide which way the market's going. Is it going up or is it going down? And then if it's going down and you want to be long, you shouldn't be there, should you? So you've got to make a long-term decision on the direction of the market, or the direction of the asset you're going to buy. Yeah. And then once you've made that decision, you then do your research to pick the best possible constellation to lower your risk and maximize your upside on that thing. So for me, I see inflation everywhere. You know, I'm like that little kid in the Fifth Sense. You know, I see inflation, people. Everywhere I look, there's inflation, and it's rampant. And I go, well, you know, I thought that was coming, and here it is. And if I'm not mistaken, and I'm just seeing what I want to see, there's going to be 10, 15, 20% inflation, you know, every year, 5, 10, 15, maybe it's going to accelerate. And my money is going to get put through the shredder. So I don't want to be in money. So what am I going to do about that? Yeah, well, I can put it in property. There's worse things to do than that. But what property should I get? What's the safest property? What's the property that give me yield? You know, I put my property out and try not to be stupid. And then I look at equities and I go, what are great equities? Well, gold shares, love it, lovely, because inflation, gold, yeah. Blimey, they're all down on their backsides, and everybody says they're rubbish and they're paying 5% dividends. Well, I better make sure that I'm right about gold and the direction, and there is inflation. And once I go tick, 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 and once I check my facts 5 times, and once I slap myself on the head to make sure I'm not seeing things, and once I go round and round until I'm absolutely sure, well, I'm going to buy quite a lot of them, and so on and so forth. And then I go, well, inflation, you know, and they're giving money away. So why don't they give me some, and I'll buy something that can't get diluted away. And then, you know, and then I have this anti-inflation diversified portfolio of exposure. And then I'm either going to be right or wrong. And if I'm wrong, hopefully I've covered my backside enough that I won't get killed. And if I'm right, well, I'm going to make a lot of money. And, you know, if you are somebody that likes to invest, you've built up a toolbox of tricks for different circumstances. So, you know, I mean, Steffi, I think you created champagne because you saved me a huge sum of money when you went, oh, they're looking down Italy. And I went, yeah, sell everything. Yeah. And then, of course, the trick in my book is, oh, after it crashes, leave it, count to 10 days, 10 weeks, whatever, and then buy everything. And then it goes up a long way and you make a lot of money. Yay. So that was my toolbox. Yeah. And now we're no longer cheap. And I'm going, oh, is it going up or is it going down? I don't really know now. Therefore, I shouldn't really be playing. And so what does my toolbox say? My toolbox says, run away, get into cash. Oh, dear, that's the inflation, though. Oh, dear, that's not such a great idea now, is it? Well, I better find some other places to put my money, special situations. Hey, all these Americans are going to buy all our companies. Let's see if I can pick those ones out. Oh, maybe it's Vodafone, maybe it's GSK, maybe it's Megit. Oh, it was. Yeah. And, you know, you refine your thesis. And yes, I have a lot of gold stocks. I've got gold coming out my ears and the blooming thing keeps going down. And I'm going, what's going on? I go to my little book and I go, what's going on? Check inflation. Yes, yeah, inflation check. Yeah, printing money check. Are they going to be able to stop? No, check. Okay, well, I need to buy more then, don't I? And then how can I be this wrong? Well, I think about it. You tend to get in a little bit early on these things, 6 months. You were talking about crypto when it was nothing and now it's a lot. And everybody was saying, what are you talking about? And then bang, off it went. So maybe it's just a bit early. And you benchmark and you navigate. And if you don't, and if you're not prepared to be wrong, if you're not prepared to challenge your own ideas, it's a very difficult game. And right now, what I see is risk. There's a lot of risk off going on. And, when the risk off is going on and I'm feeling it, I want to be risk off too in the areas which are shaky. And it shook weeks ago and now it's all coming back. They're going risk on again. And I don't know why. And if you don't know why, you're dicing with spicy situations, aren't you? So you stick to what you're confident in. If you think it's gold, it isn't. And if you know it's gold, it is. So you stick to those opportunities, you risk off and focus on the things that you're very, very sure of. And that's where I sit right now. And come St. Ledger Day, if it's all been trickling up and everything, the angels are singing and they're cranking that printing press still, and they're saying there's going to be no inflation, have some more money, no inflation, no, prices are going up, it's only temporary, no. I'll be sneaking back in again and riding that, looking at the S&P going like that, and then suddenly bang, and I'll be gone when it does that.
Yeah. So if we talk a little bit about crypto, reading your column on Forbes, you kind of said we were entering a bear market quite a few months ago, and now it seems like, yes, we drop, but we are kind of riding back up. Now, there are people, Bitcoin maximalists, they are saying that we are going to go over 100K this year. Do you how do you see the crypto market now? And maybe we can start with Bitcoin and then we can talk a little bit more about some other altcoins.
Well, Bitcoin is the king, and it is crypto as far as I'm concerned. Although that's slightly shifting with Ethereum, but Bitcoin, there's nobody in control of it. There's nobody to say, oh, it's got to do this now, it's got to do that now. And you look at Ethereum, and there's a load of young billionaire geniuses who say, we should completely change this now. We should completely do something different. We're going to do something that nobody knows what's going to happen when we do that, like this fault with London. And, hey, yes, well, transaction fees are going to go down. Oh, they went up. And so, it's extremely high risk. Crypto is extremely high risk. And, buy it when it's cheap, sell it when it's not. And it's not cheap. It's $2 trillion. It's a quarter of the value of the whole gold market right now. And, it remains spicy, but it is doing that. I actually wrote a piece for Seeking Alpha that said, this is what bears like me think it's going to do that. And this is what the crazy bulls think it's going to do that. And it's exactly done that. So they are in charge. Now, I think it's a bull trap. And until it all starts to make sense again, until, that day, I'm not there. I'm actually in some crazy altcoins, which are really fantastic opportunities, but I'm not the cryptocurrency environment. I'm not interested in. I'm not interested in Ethereum. I'm interested in the interesting parts of DeFi. That's very exciting. And then I'm interested in some NFT stuff. And actually, I'm looking for the next thing that's coming after NFT, because it's like, cryptocurrency, DeFi, NFT, something no one's thought up yet. And the next thing after that, they haven't thought up yet. And, that is where the pop is. What is the next thing after NFT? And there'll be a whole load of tokens come out that do something that you've never heard of. That will be 1 cent. And you can buy 1 million of them, and then they'll be $2 3 years later. Okay. So that's kind of where I'm sitting at the moment, and just waiting for the next thing.
There are some viewers on YouTube. They are asking you to kind of tips your favorite altcoins or project or your gems. You talk about some interesting project that you like.
Well, okay, I can only tell you what I've got. Okay. And I don't have much right now. I've got a lot parked in DeFi earning ridiculous rates of interest. And I love that, although it scares me to death because of all the hacking issues that go along with that. But, Compound and those guys. And I absolutely love that. I love seeing my interest ticking up in real time. I love all that stuff. And there's crazy opportunities like Grain, which is a token, which is a compensation token out farm. And, people don't think, because it's such a novice investment environment, people don't do things like a present value calculation on something that's worth $1 that's going to get reclaimed over the next 10 years. And if they did that, they'd go, oh, blimey, that's worth 80 cents. Why is it trading at 4? And, there's a whole smattering of those kind of things out there in the market. But I'm really stood back from that. So I do have a fairly large amount of Grain, for example. I do have a nice little chunk of Rarible, because at some point they're going to go on Coinbase and they're going to explode. Not for any particularly good reason beyond it. They'll explode because they're going to go on Coinbase. Because they're the only NFT token platform that can have that independent DOA kind of existence out there. I'm aware of on the Ethereum chain. OpenSea, marvelous and all that, but I can't buy their DOA token. I can't play them like that. And Rarible, for example, you could. So I've got a little chunk of that, and I'll be buying little chunks of that for a couple of years, I think. But that's really the only two things that. And Umbra, of course, is an awesome thing, and I've got a stack of that. But I am almost. I want this blooming crash to get out. And if it doesn't crash, well, I'll go fantastic. And then I'll be looking for the thing after NFT, and I'll be looking at again for special situations, because again, it's a toppy market. And the only way you can really go there is to work out toppy, the next big thing, the next exciting play, the next thing that's going to pop. If you looked at equities in the US, you'd go, well, you want to be in biotechs. Well, you would have wanted to be in biotechs. You want to be in marijuana stocks? Well, you would have wanted to be in marijuana stocks, and they came and they went. Oh, you want to be in SPACs? Well, you would have wanted to be in SPACs. Yes, you would have. So what now? Because they've all gone. Well, now it's gene editing stuff like CRISPR and EDIT. And the DNA stuff is going to be the next sizzly thing. So you would go there. Do you want to buy GE right now? Probably not. Do you want to buy Apple right now? You've got to have a strong nerve. So you end up tippy-toeing around the margin, taking big risks with small amounts rather than huge risks with large amounts. And I think that's the crypto thing. Take big risks with small amounts now.
So before I let Zak ask the next question that I see you want to, right. So I'm seeing what you said is basically crypto is kind of like quite nervous. And the funny things, it's not funny, it's quite difficult to understand, is that we are seeing regulation, they are kind of kicking in, they are creating problems, they are putting pressure. And that's coming from the US particularly. I mean, we saw China and everything, and crypto is still going up. That's kind of something that I really don't understand. So looking about the next things, do you think it could be something that is going to be maybe more Web3, like DAO or like metaverse, or like something that can actually go out of the centralized regulation and kind of build on the top of that trend?
I think it's very, very easy to get left behind in crypto. And I may have been left behind in just a few weeks. I mean, I got hit with COVID and nearly died. And then I came back, and, you know, I got out of a lot of my crypto just before I went into that blessed state. And I came out of it again. And it could be metaverse, and I'm not up to speed on that. And it could be something that's already happened that none of us are up to speed in, that's fizzing away somewhere. So with crypto, you absolutely have to keep digging all the time. And it's the same with equities. I mean, Zak spends his whole day, you know, pulling charts around and researching DYOR. And if you don't do that, you will not succeed in any of the investment instrument. And you've got to keep digging until you find it. And then when you find it, and it's clearly obvious to you, and you know it's gold, you don't think it's great, you know it's great, then you move into it. And I just know that if you look at the way that crypto went, it went cryptocurrencies, and then it went DeFi, and there was all these DeFi things that were worthless as far as the world was concerned. And then everybody went, well, not everybody, a few people like me went, oh, holy cow, and bang, up it went 100 times. And then it came down 50 times. And then it went up 100 times in the next cryptocurrency bubble, or whatever, boom, whatever, however you want to put it. And then NFT came along, and it did the same thing. It went, you know, who wants pictures of silly skulls with sunglasses on? Don't need that. And then bang, up it went. And everyone goes, it's amazing, and bang, it went down, and then bang, it went up again. So there's the big crypto cycle of currencies, and within it are these new forms of crypto that go through little sub-cycles. Because if you look at DeFi or DAO, if you want to put these governance tokens as a separate thing altogether, which is they kind of are, that's the invention of the version 2 of the joint stock company. And that is a massively disruptive and amazingly liberating development, because now you don't have to have Companies House, you don't have to have all that paperwork and bureaucracy. You've got a new computerization, digitized version of the way that limited companies work. And of course, that's massively powerful, and of course, that's going to create huge amounts of wealth. But that was just a development that happened, however many days ago, or weeks ago, months ago. And someone will come up with something that is something or other, a way that you can own your house and trade your house and move in and out of other people's and do crazy things with real estate. For example, bang, there'll be billions created overnight in that area. But it won't happen until it happens. And if it might have happened already and nobody noticed. Yeah. So you've really got to be, you know, digging and go, God, someone's done one of them. I mean, no, that's not possible. That's amazing. That's incredible. I love some of that. Bang, up it goes. If you get in at 1 cent and get out at 17, like I did Matic, the blooming thing goes to 240. You've still done really well.
Yeah. Zak, floor is yours.
Yeah, no, I think there's, I mean, you obviously highlighted trying to get in before the herd on new things. I suppose an obvious question I would ask is, what are your sources of information? Because you're obviously not reading the FT to get your ideas.
There's this great site called ADVFN, and I highly recommend it.
So that's it, is it?
Well, not, but that's a very strong source of information for sure.
So in terms of finding new things and commentary on new things, is that, you think, I mean, apart from what you do, is that I mean, because I mean, it was, I mean, obviously ADVFN, I was going to say that, but the DYOR is very serious and very difficult thing to do, and it takes sort of years to be looking at the right places for the right things, and maybe that's right. The edge that we both have, that we both know where to look. We both know immediately after the first 2 words whether somebody knows what they're talking about or doesn't. So I have the same on Twitter. I can, because I've been on there since it started, or 13 years or whatever it is. I know who to follow, because anybody with a brain, you can tell the people with brains and knowledge just by the way they write, just a few tiny signals that they have, and the people who are just talking rubbish. And so I find Twitter very useful because I know who to follow, and I'm already following the best people around for my area. And I think that part of the process is it's a very boring part of the process, and it's not something that people talk about. But I think that if you, in a way, if you've got the right sources, it will almost guarantee that you have the right results. And a lot of the time when people don't, it's not even to do with your brains, it's to do with your sources, which is actually the difference.
Sadly, I can't disagree with the word you said.
Thank God for that. So there we are. So I mean, maybe in a way that's something for another time. But just people always talk about the investment strategy and everything else, but I think it's actually a research strategy. And if ADVFN is the easiest way to get started, we'll maybe go for that. But the odd writer here and there has been around the block a few times, maybe worth following too. But I mean, I think that is important. Well, obviously, what helps me is interviewing the horse's mouth on many occasions. So within the first 5 or 10 seconds of speaking to a CEO, I think, oh, it's one of those, or oh, this is really good, or this is rubbish, or and because it's literally practice makes perfect. And after the 100th time, or the 500th time, or the 1000th time, you remember the trail of interview results. Oh, a year later the share price is up. Oh, a year later the share price is down. I was interviewing somebody today. He's got 40 years in oil and gas, and he's a I don't know, petroleum geologist or whatever he was. And I mean, there's no way you'd be a seller. I mean, he's got a penny stock. I mean, there's no way you'd be a seller, and you don't even care where the oil market's going, because he's been through everything from the Arab oil crisis to negative oil last year. And so people like that are, the management is very important on any stock. But from what you say on other aspects like the cryptos or the whatever's new, you're basically buying, you're trading on moonshots and hoping that one of them will be a 100 bagger or 1,000 bagger. And
it's definitely trading, and it's definitely about all those things that an investor would say was ludicrous. And it actually is. I found the whole crypto sphere very refreshing, because it blew out a lot of cobwebs out of my brain when it comes to markets, because they it's all about, is it a positive sum game? Is the money coming to the table? And as fortunes have welled up from what's been going on in crypto, money has appeared out of thin air, has been printed, because these things have incredible use cases and are massively exciting things. I mean, a compound or a Aave is a way the way you can get 6% on your money. I mean, what's that worth? I mean, this is huge, right? And that value, boom, just came out of nowhere, in the same as all the value in Apple came out of nowhere because somebody invented silicon chips, or Microsoft because somebody, made a C compiler or whatever it was, and they invented the computer industry. So that wealth is gushing out of the ground, and therefore you do get into a situation of it being a land grab, and it being all about getting your bucket under the gusher that this is creating, which is completely different from investing in a load of incredibly hardworking people who are bogged down by huge amounts of bureaucracy and are trying to build businesses in the middle of a plague. And that is a very different game, and it's a different skill game, and you do, as you say, years of practice. To me, it seems easy, but I have been doing it for a huge time, and all my neurons have been burned into patterns that pick out winners from losers. And it's very hard when you start not to get suckered, and not to. It's very difficult to understand what's going on because it's your first time, and that's, fortunately, there's been so much money coming into crypto that a lot of people have made it, have lucked it, because it's all been, the tide has been coming in for them, and and then they hit the bump, and it's all gone again. Like some poor rapper who made 4 million and then lost it all because he levered up, as we all know. We've all had our rear end seared from being too much levered up and being licked when the market's gone against us. And how many people haven't really lost their shirt by having too much leverage, and how many people that are in the new generation of investors in equities and in crypto understand how that works and how that's going to part their hair to the left at some point in the not too distant future.
I mean,
right
one of the things, well, one of the things about investing, which may be counterintuitive, but I mean, you know, even if you're Warren Buffett or you're whoever you are, you're always gonna get sucked on some trade. You're always going to make a mistake. It's impossible not to make the mistakes. You put in the 10 grand, it becomes a zero. That's always going to happen if you're in this playing field. But the area which I think is the weak point that I see with many private investors is not being able to stay in for a 2x, 3x, 4x, 10x situation or position. And that's where they're losing out. The strike rate is the same probably for everyone, but it's how you maximize your winning positions. I say to some people, just get in stages and get out in stages so that, you know, you've got more, you don't have such a binary result. And, you know, so you buy some stock at a penny and you get out at 2 and then the next week it's 10. Obviously, if you've got out half, etc., top sliced it, that would be a thing. But I mean, do you see that as
I tell you, Zach, I can't do that. I can't do that. I see a 30% profit, I'm gone. And with crypto, that's been, you know, in some senses, I can do a 5x, I can do a 10x in crypto, but as soon as it goes 20 or 30 or 50, I'm gone. And you know, literally, I will bail on a 30%. And over the years, I've managed to cling on more and more and more and more. But, you know, if I see 1x or rather 2x, you know, I find it exceptionally difficult to hang around. So it doesn't actually blight you that much if you are, depending on your style. But, I mean, the wonderful thing about the markets is that you can have 50 different ways to skin the same cat. And I'm not pro animal cruelty, please understand that. But, you know, there are many, 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 many ways to do it. And, you know, many ways, like you say, oh, well, you know, get on a winner and you run it to 5 or 10x. And I go, well, I know, I get a 35% and I'm gone. And then I'm just looking for the next 30. And you know, I probably have 40 stocks. And every time one of them hits 30 or 40%, I'm knocking that one out. And you'd be amazed how many companies go up 30% in a year from a low point. And, you know, you will still rotate your portfolio every 12, 14 months. And you'll still make 15 to 25% doing that. But, you know, and then there's someone that says, well, you know, you buy 5 shares, one's going to go up 10 times, get the other ones or cut your losses and off it will go. And hallelujah, you sell it and you've got a great return. And that too works. And so, you know, I think it's, I have to stand up for those people that go 3x, no, I can't do that, 30%, because I understand that.
All right.
That's me.
All right. So what's, I mean, I'll just give, I alluded to my favorite thing at the moment, which is probably just trying to bet on the FTSE getting to 8,000 over the autumn, which sounds like complete madness, but that's the one I'm going for. Do you have a sort of a favorite thing that you're focused on at the moment?
Well, I think I'm wrong about gold in the short term, and I'm going to be right about it in the long term, and I'm going to be, you know, catching a lot of nice fat dividends. So that's one of the things I'm doing. I think there's a lot of companies out there that will make you go, oh, what? Take over them? No, really? I think there's a lot of American M&A. Imagine what the Americans are going to buy, and you'll be fine. I mean, and they're going to buy things like British Aerospace, you know, and they're going to buy things like Vodafone, and they're going to buy things like GSK, and people will go, what? No, you can't. No, what? But if you look at them, they're just the wrong price. And
so that sort of ties in, but that ties in with the FTSE at 8,000, actually.
Yeah, sure, absolutely, absolutely. And there's absolutely no reason why the FTSE shouldn't be at 8,000. And there's absolutely no reason why, if they turn that spigot of money off in America, it won't keel over and do a nosedive. And that's the call you've got to make. Is the market going up and down? And I feel that once the summer's out of the way, if they haven't, you know, pulled the ripcord on the parachute, then we will have a run, you know, a good another 6 months, and it could go a long way. Because, you know, at some point they've got a choice. They've got a choice of a vertical bubble in the equity markets, even beyond the bubble that it's in now, and a choice between 7% inflation and 25% inflation. And which one are they going to pick? Are they going to pick resetting this whole thing in 2 or 3 years, or are they going to grind it out over 5? They're not going to grind it out through austerity now, are they? Oh yes, let's put up interest rates and have austerity. They're not going to do that. They're definitely not going to do that. So what's the alternative? The alternative is to inflate away the debt and rebase the economy. Oh, GDP, by the way, is almost back to where it was before it crashed. Yes, that's because inflation's up 8%. But you know, that's people are already doing that. Like, oh, GDP is almost back to where it was. Yeah, of course it is. Without any tourist trade, without any hospitality trade, without any of this trade, without any of that trade. I wonder how that's GDP's back there. I wonder how. Well, because the inflation is done the GDP move, and that's what they're going to do to get everything back on an even keel. They're going to debase money and rebase the economy, so the GDP is at the right place for the debt that they're printing, and life will go on. And that's what I'm trying to base everything from. And it's a very wobbly platform, because you're not meant to escape. You know, you're not meant to get out through an escape hatch for this, because the whole point is everybody is in that situation and their money gets shredded, and that's what rebases everything. So to find the escape hatch, crypto, oh funny, they don't want any of that in Britain, do they now? Oh yeah, I wonder why that is. They don't want that escape hatch. Oh, America, yeah, escape hatch from all our devaluation. By the way, you're going to have to fill it all out in your tax form now. Yeah. Or you can't be anonymous anymore. No. China, oh yeah, by the way, we don't want any of it at all. Get the hell out of our country. Yeah. And so it's going to be very, very difficult, very, very tricky to navigate what is going to be a rebasing of all these different economies, because we're in a situation which is a post-war situation. Like it, you know, in its structure, it's very similar. And I know the politicians think like this. It's like we've had a war. We've had a war against COVID, and now everybody's got to pay, apart from us, of course. And you know, it's going to be very difficult to dodge that environment and not get clobbered. And so I'm kind of worrying about getting clobbered more than I'm worried about making even more money. So it's going to be a pretty interesting period of 3 to 5 years, because we're going to get this inflation. We're going to get this clamping down of escaping its consequences, etc., etc., etc. And I don't have the answer right now. That's what I'm working on. And when I find the answer, I'll tell everybody if they pay me.
Fantastic. Clem, can you remember people where they should, you know, they can always read your stuff on Forbes and Seeking Alpha is all out there. If you can just
yeah, it's all out there, and I've been very, very fortunate in that I've got everything right for about the last 20 years, rather like Zak. But when I say that, I can prove it, because you can just go back and Forbes and you know, Google it and Google what I said before the financial crash of 2007, and Google what I said in 2009 when I said you should buy this, and Google my stuff when I said, oh, it's the end of the world with COVID, etc., etc., etc. It's all there. And of course, when you start following what I suggest, I'll start making mistakes, because that's how this stuff goes. But you know, we are at a very unique point in the market. And we've all of us professionals, like Zak, have all been, you know, making it like a bandit. And I get out early. I said that earlier on, and I feel like, you know, it's time to put your chips in a bag, go cash them out, and leave the casino for a bit, and you know, not stay at the tables. And if you do stay at the tables, maybe play a different game. Because that dealer that showed up has got all these flashy rings and keeps dealing themselves. No, 21s. And I think it's a very, very fragile period in the markets right now, both in crypto and in equities. And, you know, that one needs to work out what's going to happen in the next 6 or 9 months. And the only thing I see is inflation. So I want to be short money. That's quite difficult.
Yeah. Zak, any final thoughts before we wrap it up?
There's so many thoughts from Clem. I don't think my thoughts have sort of fizzled away. But no, well, I'd just be interested to see whether inflation does come in at that magnitude. I do think that the internet has been a great deflationary vehicle, so it's kept prices down, and it'll be interesting to see whether you'll actually get, you know, because you just find the cheapest price, etc., etc. But it'll be interesting to see whether that scenario pans out, because obviously we should have had inflation in 2009, we should have had inflation now, and although they just fiddle the figures, so that's that. But I think inflation actually is good for the stock market anyway, so I'm not quite as bearish on that.
Well, Zak, I think that's right. If I can come in there, we have had inflation. It's called asset price inflation, and that's why the houses are so high, and you know, why we're all bit and twisted about, you know, not having huge mortgages, because the money went into assets, and it went into illiquid assets, and those illiquid assets is real estate, yeah, and equities, because they are quite illiquid in many ways. So the money is trapped in those assets which have bubbled, and if those bubbles decompress for some reason and the money pushes out into the open economy, it will explode. But it won't, because it's almost designed to get stuck in real estate and in equities and in bonds, yeah. But there's just money now up to people's ankles everywhere you look. And although some people say, no, it's not up to my ankles, you know, if you can see, there's a lot of people taking out 60 grand and bounce back loans and bought cars and stuff like that. You know, there's lots of people walking around with smiles on their faces, not looking like they're going to be out of a job, not looking like they're worried about their financial futures. And that's because they, as you said, they've thrown themselves out the window and they've fallen into a safety net. But ultimately, when money is running around the place like that, it turns into inflation. And yes, internet is deflationary. Yes, there's lots of deflationary pressures. But as I walk around, I actually feel I'm seeing it in various things. Cost of a haircut, you know, cost of a nice meal in a restaurant no longer.
Even a coffee, Clem. Even a coffee.
Coffee. It just goes on and on and on. And of course it will happen if there's all this money about. And there is all this money about. There's $1 trillion that the banks keep pushing back onto the Fed in the US because they can't use it. And as somebody that just said to his wife, go and borrow loads of money, woman, I think, you know, now's the time to just ring up people and get them to lend us large amounts of money. And she's picked up the phone and going, can you give me large amounts of money? And they're going, yeah, sure, come on in there. You know, that's not a deflationary environment.
Yeah.
Okay, well, I can't follow that.
Zach, you could go out right now and you could borrow 6-7 figure sums. Yeah, just like that.
Yeah.
That's not a deflationary environment. And because you could be spending it on your new Lambo and they would sell it to you, and you would lend you the money on it.
Zach, I think
I prefer to get taxes. But yes, no, renting and taxis. You can never lose with those two. But anyway,
I want to see you in a Lambo, Zach.
Yeah, yellow one.
Bright pea green. Come on, be up with the times.
Okay, get one of each. So there we are. Well, thank you, folks. I think that's been pretty comprehensive, isn't it, Steffi?
Yeah, I think so. I think we covered a lot, and yeah. So thank you so much, Clem, and thank you everybody for joining and watching. And obviously, if you have any questions, just get in touch. That we are going to do it again. You
see, Steffi's even got enough money for a tiara there. You see, all those diamonds. You just went down the bank, said, give me $250,000, bought herself a tiara. And the price of tiaras goes up. You know, that's the environment we're in at the moment.
But I think, Clem, saying that is something that maybe, you know, that, I mean, we are talking about money literacy, and most of the people don't even know what is money. But for instance, myself, I realized that actually, when you need to take on debt, you are an idiot if you don't borrow money. And when I was looking at my dad, and I was saying, you know, he's borrowing money, you know, that's wrong, you shouldn't. But when you actually understand the economy is actually based on borrowing money, if you don't do it, you're just gonna take, other people are gonna take advantage, they're gonna borrow money. So if you don't borrow money, you are just wrong. And that's kind of like a discovery. I mean, for myself, I actually click at some point and I say, right. But for many people, they still think, oh no, you can't actually take a loan because it's wrong.
If you borrow money at 18%, you're a fool. If you borrow money at 3% when the inflation rate is 6%, that's a smart thing to do. So it's like any service. If you are being serviced by people who are giving you a great product, be it borrowing or lending, then that's an opportunity. And you know, people are massively leveraged because they go out and they get a 90% mortgage. I mean, it's not quite difficult these days to do that now, or has been up to recently. But you know, they've got borrowings that are 5 times their salaries, for example, and before tax. And most people are levered up to their ears and have really, really done well from it. And most people don't realize that when the balloon went up with the credit crunch, and they go, well, you know, all the banks got a bailout. They got a bailout because if that system had gone south, they would have lost their houses and they would have lost their jobs and they would have lost all that and they lost all their debt and all that. It would have all been a meltdown, and their nice £500,000 of asset in their house or wherever it is, that wouldn't have existed. And I tell you, if there weren't bailouts that we are seeing today, again, there would be a smoking crater, and we'd be back in the Middle Ages, and house prices, you know, you'd be back at house prices you wouldn't recognise unless you lived in France, where you could see a nice 5-bedroom house in 3 acres for 80 grand.
Yeah. So, but why? I mean, just last thought. Why nobody teach people about money? That's the big question.
Well, because money's evil. Money's evil.
Yeah.
Didn't you know?
Yeah.
I mean, when I was a kid in computer games, I had this scheme where kids could make a few quid selling computer games at school. I got hung upside down by my toes for suggesting that kids should actually make money, because money is evil, and children shouldn't know about money because money is evil. And by the way, I don't have any of it, and I'm crap at it, so I don't want to expose myself to my children as being an idiot. And you know, money's evil, and you know, money went into fashion a few years ago, maybe, you know, back with Mrs. Thatcher and all that lot. And it's out of fashion. It's evil again, and that's why. And you know, so that's why people don't get taught about money, because money's evil, and you better not know about it because you might get one over on me.
Yeah, that's the point. It's just crazy, you know, when you see that the word is kind of like, it is so different than what you think. When you realize the truth, it's just difficult for people to make the right decision and get out of the mousetrap. But
you've got to study. You've got to work hard.
Yeah.
You've got to take risk. You've got to use your critical functions. You've got to run against the herd. Lots of very difficult things. It's a mountain, and you better start climbing it soon.
Clem, busy. Okay, thank you so much for joining.
Thank you,
and